Bitcoin gained some serious popularity in 2017, especially after a sudden increase in value. The popular cryptocurrency almost got to $20,000, falling short at just $19,783. But still, this made huge returns for those who had probably purchased a coin for less than $1,000 at the beginning of 2017, or even earlier than that. Unfortunately, for most of us, we were caught unaware of this huge opportunity, and for some of us, any cryptocurrency may have seemed a poor investment choice, especially when it's described as a drug and gangster money by mainstream media. However, if you did manage to ignore all this bullshit and invested in Bitcoin, then you must have made some good returns. So if you don't already know, cryptocurrencies are basically digital or virtual currencies that uses cryptography for security. The biggest advantage of cryptocurrencies are that they are extremely difficult to counterfeit and are also not issued by any central authority. They are decentralized in essence, making it impossible for governments to control them, which is why I guess they are so alluring, especially if you are concerned about the safety and security of your hard-earned money. So how did Bitcoin and cryptocurrencies come about? Well, in the 90s there were several attempts to create digital currencies, but they all failed due to third-party approaches. However, in 2009, an unknown person or group of people under the alias Satoshi Nakamoto introduced Bitcoin. Their launch featured a peer-to-peer electronic cash system that is decentralized and eliminates the need for a regulatory third party. As of September 2015, there were over 14.6 million bitcoins being traded at an estimated value of $3.4 billion. Thanks to the success of Bitcoin, it gave birth to other cryptocurrencies such as Litecoin, Ethereum, Ripple, Monero, and about 1,400 other cryptocurrencies. Bitcoin uses a clever system called blockchain technology, which ensures that all participants take part in the system to prevent double spending. The blockchain is basically a public ledger that keeps a record of all transactions happening within the network and making all the details available to every participant in that network. For this reason, it is impossible for people to fraudulently spend coins. The beauty of blockchain technology is that all records of transactions are encrypted from hacking. Each transaction consists of the sender's and the recipient's public key and the number of coins being traded. So each transaction needs to be signed off by the sender. With the use of their private key, the transaction is then broadcasted in the network after being confirmed. Within the network, only miners, which are computers solving cryptographic equation, can confirm a transaction by solving a cryptographic equation. A miner will take a transaction, mark it as legitimate, then spread it across the network. Once confirmed, the transaction is added to the network's database. Basically, the system incorporates all the data without the need of a third central authority. There are many rules programmed into the system to prevent fraud and hacks. This makes the network trustworthy and secure, hence its attractiveness and allure. Cryptocurrencies makes it easier for two parties to transfer funds between each other. With the use of your public and private key, you can make secure money transactions with anyone in the world, while at the same time avoiding high fees, like those charged by banks for wire transfers. The ingenuity behind Bitcoin is the use of blockchain technology that allows the storage of an online ledger of all transactions, free from hacking and available for all members of the Bitcoin network to see. This technology has further prospects in online voting and crowdfunding, especially in elections. Blockchain technology can be used to verify the legitimacy of votes, both in casting and tallying, hence reducing cases of vote miscounts and irregularities, all while creating a freer democracy. The decentralized model of cryptocurrencies creates a virtual world with no boundaries, where one person from any country can trade with another without devaluation of the currency and without third parties limiting access to who you can and cannot transact with. While all this sounds good, cryptocurrencies have certain shortcomings, such as cryptocurrencies are virtual and lack a central repository. A cryptocurrency balance can be wiped out if the backup also fails. The absence of a centralized authority, such as a central bank or a Federal Reserve, means that it is entirely possible for a whole economy to collapse. The market value of cryptocurrencies is controlled by market forces and thus susceptible to large fluctuations. Despite high security algorithms used in blockchain technology, cryptocurrencies are still susceptible to hacking. Even in its relative short existence, Bitcoin has experienced numerous thefts, with some of them being well over $1 million in value. Hacking is still a problem with cryptocurrencies. Then there is the question of whether they are legal or not. Unfortunately, there is no united stance on cryptocurrency, with most governments still expressing mistrust and discomfort with the legalization of a decentralized money system. It goes without saying that the decentralization of the money market is dangerous for the stability of any economy, hence a genuine reason for this concern. Some countries such as Bolivia and Ecuador have completely banned cryptocurrencies entirely. However, large nations such as the United States have so far accepted cryptocurrencies as an alternative currency. In fact, some stores have even accepted Bitcoin as payments. But since the US sees Bitcoin and other cryptocurrencies as property, like stocks and bonds, instead of an actual currency, it has imposed tax laws on cryptocurrency trading. Canada, Brazil, and a few other countries seem to share the USA's thoughts on this, but other countries such as Morocco, Ecuador, Nepal, and a few other countries have banned cryptocurrencies, Bitcoin, and its trading completely. A few more European nations have also accepted cryptocurrencies, but they also see crypto as a property instead of an actual currency, and thus have also imposed taxes on them. So blockchain technology and digital currencies are changing the old rules and systems of doing business. The existence of a decentralized system of cash flow holds huge prospects for the world, especially by eliminating third parties, cutting red tapes, and also creating a more inclusive and open financial ecosystem. However, cryptocurrencies also provide money launderers with a clean platform to engage in business, since their records are not traceable or subject to litigation. Blockchain technology also holds potential benefits in limiting fraud and rigging by establishing trustworthy online voting systems and crowd sharing and financing. With all the information being available to the public, it is only a matter of time until the entire world has to face the reality of blockchain technology. Whether we should embrace cryptocurrencies and blockchain technology is still a matter up for debate, but I think blockchain technology is here to stay. If you like this video, leave a thumbs up. And also, I would like to know your views on cryptocurrencies and the blockchain. Leave a comment below. And with that said, I guess I'll see you on the next one. Cheers.